Hey, Dan Passarelli here. I'm recording, little over an hour before the close here, so these are not final numbers that we're going to be looking at right now. What we're looking at here is the S&P 500 up about 0.3% on the day, but it wasn't that way from the beginning. Oh, no, it was not. The market was actually down at the beginning of the day, and that was as the market digested some of the data that came out this morning. Now, the first piece of data that came out was the jobless claims, the weekly jobless claims, which came out basically right on the number of what the forecasts were expecting, 227,000. And so that is, hey, if it came out as expected, it's really neither good news nor bad news, though the market tends to take that these days as good news. But we also had PPI come out. Now, the year-over-year core PPI came out at 3.1, which was basically what was expected. But that compares to, from a year-over-year basis, 4% for previous. So in the core PPI has come down pretty well, but it's not really at its target yet. We did have some good news when we drill down a little bit into various parts of the PPI release this morning. We had some of the numbers, the month over month numbers, including all of it, not just core. Actually it was core. The core PPI month over month came out negative 0.4. Now, usually when we see like a lower print, like if the previous was 0.4 and it comes out 0.3, that doesn't mean prices went down. It means they went up, but they went up less than last time. When you get a negative sign, that means prices actually literally went down, like deflation. Now, well, we really care about the year over year, and that's all sort of baked into that. So long story short, year over year core PPI is coming down, but still not quite at the number. Now, all that being said, the Fed said that they expect that the interest rate will likely stay high for a longer period of time this time around. And, they're watching. They're not just going to let this number affect us. It's kind of like, remember when you were a kid, it's like the middle of May and you said, Mom, was I good today? Am I going to get something good for Christmas when it comes along? And she's like, yeah, you were good today, but you got to be good the rest of the year. Well, it's kind of like that. The Fed has to just keep watching to see what the rest of the numbers are. So long story short, the market did end up changing its mind. And at this point in the trading day, it is up a little bit. But we've got this gap here that is supposed to be filled, is kind of what technicians strongly believe. You ask them why, and they say, I don't know, but that's what usually happens. So it is a pretty big gap. So I wonder if we could retrace and get it filled. But, we are decidedly above the 200-day moving average also. Now, all that being said, there's still a whole bunch of unanswered questions. Interest rates probably not coming down anytime soon. So for my covered calls on most of them, I am at this point going to accept assignment. I've already accepted assignment on some of them. Doesn't mean I'm going to go into all cash or anything. I'll probably sell some lower strike puts so that I could negative scalp the shares of stock or skate and just collect premium and do it again. I hope that helps. This is Dan Passarelli, Trade Smart.